This hearing of the Subcommittee on General Farm Commodities and Risk Management, entitled A 2022 Review of the Farm Bill, Stakeholder Perspectives on Title 11 Crop Insurance, will come to order. Welcome and thank you for joining today's hearing. After brief opening remarks, members will receive testimony from our witnesses today, and then the hearing will be open to questions. In consultation with the ranking member and pursuant to Rule 11E, I want to make members of the subcommittee aware that other members of the full committee may join us today. We also will have a virtual component, just so our witnesses know that. I want to thank all of you for joining us this morning. As co-chair of the Congressional Crop Insurance Caucus, I am excited to hold this hearing, which continues the committee's work to gather input on how programs in the 2018 Farm Bill have been functioning. A month ago, we held a hearing with a panel of ag economists on farm programs and crop insurance. And at the time, many farmers in the upper Great Plains were still trying to finish planting given the extremely wet conditions. And farmers in the southern plains have mostly wrapped up winter wheat harvest, which is in full force in the central and upper plains today. We continue to hear from producers about the impacts of high input costs and commodity price volatility in recent weeks. In addition to the hearings and meetings here in Washington, we have also been holding Farm Bill listening sessions out in the field, including ones hosted by Representative Tom O'Halloran in Arizona. Ranking Member Scott and I went out for that, and also by Congressman Jim Costa in California. And there are upcoming field listening sessions hosted by Congresswoman Kim Schreier in the state of Washington. She has one on Friday, and then we have one in Minnesota next Monday, hosted by Congresswoman Angie Craig. The economic and growing conditions that farmers are experiencing are ever-changing, and they vary across the country. And that is why these sorts of hearings and other meetings are important to the work we are doing to understand what's happening on the ground for producers. Our attention today is specifically on the federal crop insurance program. This hearing will gather input on how risk management provisions in the 2018 Farm Bill have been implemented and how crop insurance programs have functioned for producers. Throughout the last two Farm Bill reauthorization processes, the message I heard loud and clearly was do no harm to crop insurance. The program has been and continues to be central to risk management for producers across the country, and it has continued to grow and evolve to address the challenges and risks our producers are feeling. We have a well-rounded panel that will include testimony from an approved insurance provider, a crop insurance agent, a developer of new products, and two producers with experience with the program. I want to thank all of our witnesses here today, both in person and virtually, for the testimony you will be providing. I'd now like to welcome the distinguished ranking member, the gentleman from Georgia, Mr. Austin Scott, for any opening remarks he would like to give.
Thank you, Chairwoman Bustos, for convening this important hearing to discuss the federal crop insurance program. Today, crop insurance stands as the cornerstone of the safety net for many of our producers. But the program as we know it did not come about overnight. The various forms of federal crop insurance date back to the 1930s. It wasn't until 1980 when critical reforms were made to create a public-private partnership that the foundation was laid for the program we have today. By leveraging the private sector and incentivizing competition among companies, producers now have access to a dynamic system that provides our farmers with the highest level of service. Additional reforms in 1994 and 2000 further accelerated the growth of the program and collectively increased insurance acreage, liability, and coverage levels to where they are now. While crop insurance has been remarkably successful, it is not perfect. I hear from producers in the Southeast that higher levels of coverage are often too expensive to justify the cost. And many fruit and vegetable farmers in my area do not have crop insurance policies available to them, leaving them non-insured crop assistance program, or NAP, as their only risk management option. I believe that in the next Farm Bill, one of the best investments this committee can make is further enhancements to the crop insurance system that provide producers affordable options to increase coverage. Multiple policies such as supplemental coverage options, enhanced coverage option, stacked income protection for upland cotton, hurricane wind index, and margin protection are all geared toward helping farmers reduce the incredibly high deductible for insurance. We need to thoroughly examine these policies and determine if they are doing an adequate job of filling this gap. If not, what tweaks might be needed to provide higher levels of affordable coverage. Since 2017, Congress has provided additional assistance to producers in the form of ad hoc disaster aid. This aid has been a critical lifeline for many farmers in my district, particularly after the devastation caused by Hurricane Michael in 2018. However, the inefficiencies in delivery, The delay in funding and payments and the uncertainty of if or when Congress may act underscores the benefits and importance of having well-functioning insurance programs. Crop insurance delivers timely assistance in the wake of a disaster and provides a level of protection that farmers and their lenders can depend on. It's important to note that approximately 90% of the country's food supply comes from 12% of our farmers. At a time of instability and economic turmoil throughout the world, it's crucial that this committee does everything it can to assist farmers and ensure they're around to put food on our tables. I'm looking forward to hearing from our witnesses today. Their insights as part of the delivery system, product development, and use of the programs will provide valuable perspectives of the crop insurance industry. I want to say thank you to them for taking time out of their busy schedules to be with us here today. And Madam Chair, I yield back.
Thank you, Mr. Scott. The chair would request that other members submit their opening statements for the record so witnesses may begin their testimony and to ensure that there is ample time for questions. We're pleased to welcome 5 witnesses today. Our first witness is Mr. Bob Haney, the Chief Executive of AgriSampo, based in West Des Moines, Iowa, and he is testifying on behalf of the Crop Insurance and Reinsurance Bureau and the American Association of Crop Insurance. Our second witness today is Ms. Kathy Fowler, the owner of the Fowler Agency in Memphis, Texas, who is testifying on behalf of the Crop Insurance Professionals Association. Our third witness joining us today is Mr. Alex Offerdahl, the Crop Insurance Division Head of Watts and Associates in Billings, Montana. And our fourth witness is Mr. Tom Haig, the first Vice President of the National Corn Growers Association and a farmer from Eden Valley, Minnesota. And to introduce our fifth and final witness, I would like to yield to the distinguished member from Georgia, Mr. Allen.
Thank you, Madam Chairman, and good morning, everyone. It's my pleasure to introduce my constituent and friend, Lee Cromley. Lee is a 6th-generation farmer, along with his brother Charlie, in Brooklet, Georgia, and that's right outside of Statesboro, Georgia, and where they have farmed 2,500 acres of cotton peanuts since 1983. He graduated from the University of Georgia, Go Dogs, national champions, with a degree in agricultural and environmental sciences, and has served on the Georgia Cotton Commission's board since 2011. Along with Georgia Cotton Commission, he serves as a board member of Bullock County Farm Service Agency and the Farmers and Merchants Bank of Statesboro, a committed community servant. Lee is also currently the chairman of the Southern Cotton Growers and serves on the board of directors for the National Cotton Council of America. He and his wife, Ann, reside in Brooklet and have 3 children. And Lee, we look forward to your testimony here today. Thank you.
Thank you, Mr. Allen. Welcome again to all of our witnesses. We will now proceed with your testimony. You will each have 5 minutes. The timer should be visible to each of you, and it will count down to 0, at which point your time is expired. If you could please honor that, that would be great. Mr. Haney, we're going to start with you when you're ready.
Thank you, Chairwoman Bustos and Ranking Member Scott and members of this subcommittee. Thank you for allowing me the opportunity to testify today on the importance of crop insurance and the vital role it plays in providing risk management to farmers and ranchers across the country. My name is Bob Haney, and I'm currently the Executive Chairman of AgriSampo, one of the 13 approved insurance providers that sells and services crop insurance to farmers and ranchers across the country. I've been in the business since 1981, and our current company has a national footprint, serving farmers in every state represented on this subcommittee today. And we are committed to protecting the livelihood of the American farmers and ranchers so that they may help feed the world. I believe that crop insurance is the best tool available to farmers to protect against the natural perils that our farmers face because crop insurance provides a rapid response to natural disasters. Private companies like ours typically are able to deliver indemnity payments to farmers in fewer than 30 days after a loss occurs. And the private sector delivery of crop insurance also means that farmers get to choose the company and the local agent that can provide them and their family with the best service. Now, crop insurance is also a very big tent. Our industry protects farmers of all types and sizes and covers over 130 different commodities, including the major row crops, specialty crops, organic crops, as well as dairy and livestock. The cost share component with the federal government helps to keep crop insurance affordable for most farmers, while also ensuring the program is fiscally responsible. Now, over 40 years ago, a Blue Ribbon Commission of public and private sector visionaries conceived the concept of protecting the farmer, wherein the farmer had skin in the game via deductible, and a paid premium discounted by the taxpayer, and deploying the private sector to capitalize on its innovation and competitive nature, all in the name of secure national food supply. This 3-legged stool concept is the key to the success of the crop insurance program. Another key feature is that crop insurance is flexible. Farmers can tailor their coverage to fit the needs of their specific operations. And if a farmer or commodity organization doesn't believe there's an existing policy that works for their farm, those farmers can utilize what we call the 508H process to develop a product that does. Now, today, I would like to address three topics as we look ahead to the 2023 Farm Bill. First, I'd like to begin as the committee continues to evaluate the intersection between agriculture and climate change. It's important to note that a farmer's first line of defense against climate change is crop insurance. There have been studies conducted that show that farmers who purchase crop insurance are more likely to undertake climate-smart agricultural practices than those who do not. As this committee looks ahead to the Farm Bill, I would like to share the criteria by which we evaluate proposals in this area. First, it is critical that any intersection between climate-smart ag and crop insurance, that it maintain the actual soundness of the program. This is the underlying tenet of the program that maintains its integrity. Second, intersections between climate and crop insurance should be incentive-based and not place additional mandates on our farmers and ranchers. And finally, new climate initiatives should be funded on their own terms and not take money away from the core of the crop insurance program. In terms of meeting these criteria, we believe the 508H process is one tool that, when used responsibly, can enhance the intersection between climate and crop insurance. This process involves grower input, can lead to better coverages, and possibly lower premiums, and is required to be, again, actuarially sound. Now, shifting gears to crop insurance and disaster assistance, the last several years have seen an increase in ad hoc disaster payments as unprecedented crises have hit our rural America. It's only prudent for this body to be looking at the next Farm Bill for ways to plug these gaps in our safety net. Our ask of this committee is that you consider crop insurance as the primary tool for helping to fill those gaps where appropriate. Regarding disaster proposals, we would discourage the creation of any disaster program that would disincentivize farmers from purchasing crop insurance or that would directly compete with existing crop insurance products or products that are currently available in the private sector. We actually don't want to see the creation of a program that would double pay farmers for the same loss. This would indirectly discourage the purchase of crop insurance and possibly lead to changes in farming practices that could lead to potential instances of fraud, waste, and abuse. And we would oppose the creation of a disaster package that is funded by cuts to the crop insurance program. Finally, given the multiple mentions in the testimony relative to 508H, I would be remiss not to mention that we are working actively with the Risk Management Agency to ensure transparency and timeliness in the rollout of future products submitted through the 508H process. Our goal is to have a functional process to bring innovation to crop insurance and for the process to be as consistent with sound business practices that ensure that we continue to be stewards of the taxpayer dollars and in the crop insurance program. In conclusion, I'd like to thank this subcommittee for your support of the crop insurance and for your willingness to learn more about the perspective of our industry. We stand ready to work with each of you as we head into the next Farm Bill.
Thank you very much, Mr. Haney. Ms. Fowler, please begin when you're ready.
Good morning, Chairwoman Bustos, Ranking Member Scott, and members of the subcommittee. My name is Kathy Fowler. I'm a crop insurance agent from Memphis, Texas. I grew up on a farm and have been actively engaged in agriculture all my life. I'm passionate about what I do, and I believe in the products that I sell to farmers and ranchers. I'm grateful and honored to be in this room today testifying and proud to talk about the amazing success that crop insurance has had. I'm testifying today on behalf of SEPA, an organization of crop insurance agents with a presence in each of the 50 states. SEPA's mission is to continue to improve crop insurance because we know the vital importance of U.S. agriculture. Agents talk to producers every day and they see firsthand the challenges that confront our farm and ranch families that we serve. Agriculture has always been a tough business, whether it's adverse weather conditions, volatile markets, or bad actors on the broad scene that plague our farmers. It's even tougher today. Actually, the stakes have never been higher and the margins are tighter and tighter. I talk about trade wars, the pandemic, inflation, and other very real challenges. But what is far more real to me is when I sit down across from my desk and talk to a young farmer who is distraught about the drought situation that we are incurring today and how do I figure out how to make a crop. Farmers and ranchers all across the regions consistently say, we couldn't do without crop insurance. Crop insurance does more than just cover losses. It enables the producer to secure credit, to better market their crops, and to make the needed investments to improve their farm and ranch and build their soils. This is especially true for young and limited resource farmers. So let's just take a look at some of the stats with the crop insurance. Since 2000, the farmer paid premium has increased sixfold. We now insure 130 crops. The acres insured have risen from 200 million to 450 million acres, and the total protection has shot up from 35 billion to 200 billion. With this growth, our performance has remained consistent. The average loss ratio is well under the statutory requirement of 1.0, actually meaning that this process and program is actuarially sound. A&O monies that are allocated for delivery have sharply declined as a percent of the total premium written. So what does this all really tell us and what we're doing? I think it proves two things. Number one is we have a really good product, and kudos to RMA and this committee who's worked on this program, and also our delivery system through AIPs and crop insurance agents for taking care of business. These are great stats, and we're proud of our efficiency. But also we want to be clear where some problems exist. SEPA noted flawed design on the A&O cap and the disproportionate impact that it had on the specialty crop area. Thankfully, the issue has been addressed in the House Ag Approps bill, and I want to thank Chairman Bishop and Ranking Member Harris and many of you for working to patch these holes. With that, I want to respectfully present some do's and don'ts that might serve as a guide as you prepare for the 2023 Farm Bill debate. Don't be tricked into pay limits and AGI means testing on crop insurance under the idea that this will help small farmers, because it won't. It will hurt them by raising their premiums and removing the good risk from the risk pool. Don't cut premium cost share. Increasing premiums would move the crop insurance program backwards. Don't permit ad hoc disasters or permanent disasters to undermine crop insurance. You don't want to discourage producers from using their own risk tools. Don't try to mix policy objectives like climate into crop insurance. Crop insurance is meant to protect the farmer's profitability. When profitable, good conservations will follow. Let's talk about the do's. Do have high expectations of crop insurance and work with us at building the program to achieve even more. We certainly want you to support the 508 process, which meets these changing needs. Do work to help farmers purchase higher levels of insurance. They need more coverage. Do fix the problem facing specialty crop areas and improve the use of crop insurance data for the benefit of farmers. Lastly, in closing, please make sure that we make a case for additional funds for the next Farm Bill. The ad hoc disaster was certainly needed, but the money can be better used. Write a budgeted investment. You can strengthen the farm safety net and crop insurance to benefit farmers, ranchers, and taxpayers. Thank you for what you do for this great nation, and I look forward to your questions.
Thank you very much, Ms. Fowler. Mr. Offerdahl, please begin when you're ready.
Thank you. Thank you for this opportunity to discuss farmer-driven innovation in the federal crop insurance program through a feature referred to as the 508H process. I'm the managing partner at Watson Associates, and we're an agricultural economic research firm that specializes in crop insurance and analysis tools for farmers. WNA has been one of the most active participants in the 508H process since its inception. We work primarily with farmer producer groups to develop new insurance programs tailored to their needs, their crops, and their regions. We're proud to have developed a sizable number of the 508H programs that have become important components of the overall 508H program. Federal crop insurance has succeeded because its unique design is a partnership between government and private industry. And 508H is a perfect example of this partnership. The 508H process was first added to the federal crop insurance program in 1993 as a special avenue through which farmers could propose new ideas that could be directly incorporated into the insurance program. Innovation through 508H is not a peripheral element of the program. Today, 86% of the crop insurance policies that are sold originated as 508H proposals. Revenue insurance, for example, the largest component of the current program, originated as a 508H experiment in the 1990s. Margin insurance, which adds coverage for shifting input costs, a program that already exists today, started in 2014 as a 508H experiment. Important coverages for dairies, for hurricanes, for cottonseed, pulse crops, hemp, livestock, and countless enhancements to the program to meet specific changing needs for producers all began under 508H. The 508H process has several steps. To initiate a new product, a producer group or a crop insurance company will partner with a well-qualified team of developers to create a new program that's designed to solve a problem that the current program does not address. The proposed program is then carefully vetted by the talented staff at the USDA Risk Management Agency to address any of the critical flaws that might be present in the design that could make it vulnerable to fraud, waste, and abuse. These have to be stamped out before a product can be put on. Underwriting, premium rates, and compliance are all subject to rigorous technical review, including review by independent outside actuaries, agronomists, and underwriters with experience in crop insurance design. The Federal Crop Insurance Corporation's board then meets with the submitters to quiz them on any outstanding issues before voting on whether or not to approve a new program. We as submitters acknowledge that the approval process can be difficult and complex, and there have been many adjustments, including in the 2018 Farm Bill, to improve this process and to make it more accessible for more producers. What you've done is working. We also need to respect the fact that the FCIC board has a special fiduciary responsibility to taxpayers, and their judgments on program design can affect the fairness to farmer customers and the stability of the agricultural markets we're looking to protect. If a proposal is approved by FCIC and it's implemented in the field, submitters are eligible for reimbursement of their expenses within reasonable bounds. This feature was added in 2000 to try and make it easier for producer groups to engage in this process and to solve their own problems proactively, to make the program more adaptable to change. And it's working. Even under this system, if a product is never approved, the developers and the producer groups behind them are responsible for bearing the cost of development themselves. The 508H process is not perfect, and we'll have some suggestions for improvements as this process proceeds. But overall, it's been a tremendous success, and some minor adjustments to an overwhelmingly successful program is certainly a nice place to be. So crop insurance today is a critical part of the agricultural safety net. It's relied on by farmers, by lenders, and by rural businesses in every part of the country. No USDA program reaches more farmers and more crops in more counties than crop insurance. Innovation through the 508H process has been a major factor in that success. Please continue what's working.
Thank you, Mr. Offerdahl. Mr. Haig, you are now recognized for 5 minutes.
Chair Butos, Ranking Member Austin Scott, and members of the subcommittee, thank you for the opportunity to testify today. My name is Tom Haig. I'm a fourth-generation family farmer in south central Minnesota, where my son and I grow over 1,700 acres of corn and soybeans. Federal crop insurance is a major pillar of risk management for vast majority of corn farmers. Simply put, the public-private partnership of crop insurance works and plays a significant role for agriculture in the wake of natural disasters. As growers sit down with their lenders and make plans for the upcoming crop year, we spend a good amount of time discussing our cost inputs, crop rotations, and making our market strategies. We also work through the federal crop insurance coverage options with our lenders and our crop insurance agents in order to purchase the policies that work best for our farms. In 2021, corn farmers bought more than 587,000 federal crop insurance policies, insuring over $52 billion worth of liabilities. Nationwide, there was coverage on 83 million acres of corn, with an additional 10 million acres that had companion endorsement policies. In my home state alone, Minnesota, were over 42,000 policies which covered 8 million acres of corn. The bulk of corn growers purchase revenue protection, which protects lost revenue due to production loss, changes in price, or both. Built into these policies is important coverage against prices rising at harvest time. Corn growers also have access to supplemental coverage options, the enhanced coverage option, margin protection policies, and whole farm revenue protection. Implementation of the Farm Bill has been very smoothly. The crop insurance title allowed for the enterprise units to include land across county lines and the creation of multi-county enterprise units. Corn growers are pleased with the increased coordination between USDA agencies, including the Farm Service Agency, aligning deadlines for commodity programs with the crop insurance sales closing dates, and RMA working with the Natural Resource Conservation Service to allow cover crops as a qualifying good farming practice. The 2018 Farm Bill included direction for RMA to research and develop new policies, including the quality loss option. While it has not solved many of the issues that growers face when confronting quality losses such as vomotoxin and low test weights, we appreciate that the option is available. In 2020, RMA released the Hurricane Insurance Protection Windex policy, which provides coverage on over 70 crops, including corn. Since the 2018 Farm Bill, agriculture has faced multiple weather patterns. During the planting season this year, growers across the northern plains had delays due to cold weather and wet weather. For many producers, drought continues to be a major cause for concern this year. Approximately 30% of corn production is within an area experiencing drought conditions. When widespread disasters strike, crop insurance companies are generally able to provide timely loss adjustments and to quickly process the bulk of indemnity payments. While individual growers are not made whole, crop insurance provides the tools and ability to recover and continue operating into the next year. NCGA has affiliated states associations continue to lead and partner with other entities for the creation of new risk management tools. We have been successful in developing policies, including the widely adopted trend-adjusted yield endorsement and the recent endorsement for corn growers who split apply nitrogen. Last week, NCGA held our Corn Congress summer fly-in. Corn growers stressed that our #1 priority for the Farm Bill is to protect crop insurance from the harmful budget cuts and reforms. The result of our nationwide survey shows that corn growers overwhelmingly choose the crop insurance title as the most important, and that cuts to the federal crop insurance would negatively impact our farming operations. In closing, we are grateful that the Agriculture Committee prevented attempts at harmful reductions to crop insurance. We appreciate your consideration of our views and the needs for our producers to have effective and affordable risk management tools. Thank you.
Thank you, Mr. Haig. Mr. Cromley, who's with us virtually, you can begin when you're ready.
Thank you, Madam Chair, and Ranking Member Scott, for the opportunity to speak to you today. Thank you for all the good work you do for our agriculture. I am Lee Cromley from Brooklet, Georgia. I'm a 6th-generation farmer, farming with my brother Charlie. We farm 2,500 acres of cotton and peanuts. Our farm is located about west of Savannah, about 60 miles off the Atlantic coast, which puts us in the target of hurricanes on a fairly regular basis. I'm testifying today on behalf of the members and growers of the National Cotton Council. Crop insurance is an absolute necessity for cotton producers. Improving the risk management options for producers has been a top priority for the cotton industry for many, many years. A key component of crop insurance is the public-private partnership between the government and private companies that offer products, as well as the agents who service these policies. In the current economic climate, access to essential tools to counteract these challenges is a must for any cotton grower. One of our industry's great achievements was the creation of the Stacked Income Protection Plan for upland cotton. Stacks is an essential risk management tool for many producers and should be protected as the upcoming Farm Bill is developed. In the fall of 2016, the Southeast received tremendous amounts of rainfall just prior to harvest due to Hurricane Matthew. Many producers in the region experienced substantial quality discounts for lint and seed. We are grateful that in 2018, RMA aligned cotton quality loss calculations with other commodities by changing the deductible to a trigger set at 10%, thus allowing growers to fully capture the amount of quality loss. In 2020, excessive rainfall and extended periods of overcast skies caused a splitting of our cottonseed inside the fiber, leading to major quality discounts for Georgia growers. The quality loss adjustment created by USDA Farm Service Agency from 2018 to 19 was bureaucratic with many implementation challenges. It is vital that when phase 2 of the emergency relief program for quality losses is developed, producers like me and others who suffered quality losses due to seed code fragments are eligible for this assistance. Georgia cotton growers lost $1 million due to the devastating impacts from Hurricanes Matthew, Irma, and Michael. These producers saw record crops wiped away in an instant due to the powerful forces of Mother Nature. After these storms, RMA created the Hurricane Insurance Protection Wind Index. This product is an affordable risk management option for many growers who are at risk yearly due to their proximity to the coast. While we are grateful to RMA for the creation of this new hurricane product, additional improvements are needed to make it more effective. Growers that suffer losses from tropical storms and depressions are ineligible for the hurricane policy. Tropical storms and other events like this can have damaging winds while also leaving devastating amounts of rainfall, causing flooding that will decimate a cotton crop, especially near harvest. RMA should also hopefully create a multi-peril crop insurance product that gives growers credit for the crop that is in the field instead of only crediting growers for their annual production history. For example, in 2018, growers in Georgia, Florida, and Alabama were expecting record to near record cotton yields until Hurricane Michael. Unfortunately, growers were only compensated on the APH information well below actual yields on the farm. Growers should have an option to purchase a product that will insure the actual crop value of the farm. In the past, there have been proposals that would impose arbitrary means tests to crop insurance or limit the amount of premium discount a producer can receive. I strongly urge you to oppose any attempt to implement any proposals along these lines. Limiting access to these products would cause some producers to completely exit the insurance market, which in turn would alter the risk pool and potentially increase the premium rates across the board. I'm grateful for the opportunity to testify today. We look forward to working with the committee to address the necessary improvements discussed in today's hearings. And I'll be happy to answer any questions at the appropriate time. Thank you so much.
Thank you, Mr. Cromley. At this time, members will be recognized for questions in order of seniority, alternating between the majority and the minority members. You will each be recognized for 5 minutes in order to allow us to get through as many questions as possible. As a reminder, please keep your microphones muted, whether you're with us virtually or here, so we can minimize any background noise and make sure that we pay attention to our business at hand. I'm going to start by recognizing myself for 5 minutes with questions. Mr. Offerdahl, I'll start with you. As a developer who has gathered data, put together product proposals, and gone through the submission process for new risk management options, can you please talk about how the Federal Crop Insurance Corporation reviews proposed products and the sort of considerations they have to make in evaluating and approving those proposals? And just as a follow-up to that, if I can make this a two-parter, you want me to wait till the second part?
No, ma'am, I'll try and take
Okay, second part, can you also talk about the confidentiality requirements that are in place as products are reviewed and whether you think confidentiality is required?
Okay, so thank you very much for your question. First, to talk about the data that's required in the submission process. Generally, the best ideas for new crop insurance products come from producers themselves. They're the ones who best understand the risks that they're facing and the limitations of the current products. So typically, a new product development process starts with a phone call from a producer who's got a specific problem they're looking to solve. From there, the first task is to try to determine if crop insurance is the best way to address this problem. And in a lot of situations, it's not. There are other things that producers can do to manage their risk or to address the problem, but occasionally, it turns out that crop insurance is the best way to address that problem. From there, there's a wealth of data available, whether it be historical data captured by the National Statistics Service or ERS, or data captured by the Risk Management Agency itself. But in a lot of sources, it's also university data or data from other places. These have to be pulled together and then used to develop a full submission that meets the standard of actuarial soundness. And this is a critical concept within crop insurance because there are private companies that are sharing risk with the federal government. It's very important that we can quantify the risk that these policies impose. From there, it becomes a process of writing insurance contracts and assuring that the purpose of the policy is met with the language that's put into it. The 508H approval process involves both presenting to the risk management agency's staff, and within the federal bureaucracy, you'll not find a more qualified, talented group of people. And they run us through the rigor of all of the sort of questions and concerns that might come up before we even take the first step in the process. From there, it's submitted to the Federal Crop Insurance Corporation, a board of experts and farmers who will consider the merits of the program. If they like what they see, it goes out to expert reviewers. These are usually actuaries or academics who have no incentive to see these programs improved, and they will provide an awful lot of comments and questions and concerns. And not until those are all fully addressed can we go back to FCIC and ask for approval in those programs. So the process has multiple steps. We talk about it as a process of checks and checks and checks and balances, because it's critically important that we not put something out there that changes people's incentives. Instead, we're looking to improve the program. So to your second part of your question, where you're talking about confidentiality, the program makes provision for confidentiality, and the developer themselves are the ones who choose whether or not that confidentiality is to be maintained. Historically, and clearly RMA staff and FCIC, everyone within that process, maintains strict confidentiality themselves. They absolutely respect the submitter's right to keep a product confidential or not. And that's because a lot of the data and pieces of the program that go in are confidential themselves. Some of this is proprietary information from private companies, and they don't want any individual farmer's information to be distributed. But when it comes down to the basic concept of the program and what it's looking to achieve, there's a lot of runway required. These companies, these agents, the producers themselves need to understand what the program is, what's coming down the pipe, and what they can expect for future risk management needs. The principal benefit of crop insurance against disaster or other programs is predictability, understanding what sort of coverage can be available to you and how it will operate. And if a program is in development and it's rushed through, or if it's released to insurance providers or companies too quickly, unfortunately, they won't be ready to do a good job of servicing it. So my belief is that confidentiality has been taken too seriously by most developers, and that a more inclusive development process benefits everyone.
All right, thank you, Mr. Offerdahl. You know what? I've only got 42 seconds left, and it would require more time than that.
Apologies, I'm sorry.
No, that's okay. It was very thorough, though. I will give you credit for that. I will now yield to our ranking member, Mr. Austin Scott of Georgia.
Thank you, Madam Chairman. And after Hurricane Michael, I was one of those that met with the different people in the administration, and the concept of pre-funding disaster relief was actually one of those who was part of that discussions, and it came because there was a lot of damage in areas where there really wasn't a crop insurance program. Pecan orchards, for example, there was not a program that was affordable. And when we met with the administration, we were told that the existing tree assistance program, which would provide about $15 per tree, was adequate, and it simply isn't. And so when we talk about pre-funding a disaster program, it's not intended to replace crop insurance. There are certainly our traditional commodities where crop insurance works quite well, but there are a lot of other groups where crop insurance doesn't work at all. And we saw those significant losses from Hurricane Michael, and had we not had disaster relief, I think a lot of our people wouldn't be farming today. So it's intended to work in conjunction with the crop insurance system, not in lieu of it. And for traditional commodities, there has always been the discussion that you would not be eligible for those funds if you did not purchase crop insurance up front. But we all know there's systems that there's simply crops out there that there are no insurance programs that work for. With that said, Ms. Fowler, in your testimony, you talked about the adverse impact the cap on administrative and operating expenses is having on agents, particularly on those that primarily sell and serve specialty crop policies. If left unaddressed, what do you believe the impact will be on growers for these agents who write the policies?
Thank you for your question. Mr. Scott. The specialty crop area is actually what I testified earlier. We have now 130 crops, and that's where the crop coverage has really been enhanced, is in that specialty crop area. They're very unique. They're very tailored to what the options are in that area. And actually, with the inflation rate, this problem started quite some time ago, and we've moved along. But currently, we need to have some extra inputs in that area, just simply so that we can have enough staff, enough agents, trained, specialized folks in that area to come across and address these specialty crop needs.
Well, one of my concerns is in the development of new products. If you're developing new products, you probably have some additional expenses in administration as those new products are coming to market. Certainly uncertainty in what it's going to cost to operate. Mr. Crumley, in your testimony, you mentioned a very staggering statistic. In 2021, 10.8 million acres of upland cotton were protected by some form of crop insurance. This represents more than 97% of all upland acres. How did the National Cotton Council work with USDA's Risk Management Agency to increase crop insurance participation?
Thank you for the question, Mr. Scott. I think probably my first impression is high risk in growing a cotton crop. I mean, it's obvious that all growers just about have to have crop insurance of some form to survive in today's environment. So that would be my first comment. Secondly, the National Cotton Council and cotton farmers have for years worked with the organizations that you've been mentioned here before. The new products that come online are targeted.
Frozen.
I think we're having a rural broadband issue there. The point is that 97% of upland cotton is now insured, and it has not been that high in the past. And I do think that the association and the agents have done a good job of having the growers understand the value of the insurance. I do hope there is a way that we can, looking forward after 2018, what he testified was absolutely accurate. The yields that were above the ground were significantly higher than the 10-year average had been. And I hope that as we push forward, we're able to find a way to give producers the ability to step up, if you will, the coverage to actually reflect the pre-harvest value of it. Madam Chair, my time's out. We've obviously got some rural broadband work on in southeast Georgia, I should say, and with that, I yield.
And a lot of other places as well. Thank you, Mr. Scott. I will now recognize the gentleman from California, Mr. Carbajal, for 5 minutes.
Thank you, Madam Chair, and thank you to all the witnesses for joining us today. California has more agriculture production than any other state. A significant amount of this production comes from my district, where some of the most delicious specialty crops are grown, including strawberries, avocados, blackberries, and more. Whole farm revenue protection is the only insurance product available nationwide, which ensures the entire revenue of a farm's operation, including specialty crops and livestock. With its unique diversification discount, it is, in theory, a forward-thinking product for diverse producers and those looking to diversify. However, in practice, the program is inhibited by burdensome paperwork requirements, unclear costs, and disillusionment from both farmers and insurance agents. Mr. Fowler, is there a role for our Congress to help streamline program access? And how can insurance providers do more to educate agents and the market about this product?
Thank you so much for your question. And yes, it is an extremely complicated program. And yes, it's very hard to be straightforward with that program. I think we can actually come in and make improvements. I think it's a very, very valuable program for your specialty crop people there in California. But yes, it does need more improvement. And I think we could all work together with RMA. And I know they have overcome several challenges and changing some limits for that product also.
Thank you, Ms. Fowler, and sorry, I might have inadvertently said Mr. initially, so I apologize for that.
It's okay.
It is an indisputable fact that climate change has caused severe weather events across our nation. California knows this all too well, with prolonged drought and increasing severe wildfires, year-round for that matter. Climate change is making it more difficult for farmers to reliably grow our nation's food supply. Thankfully, growers are resilient and not easily discouraged. But the federal government must make sure farmers are insured for tough times. Mr. Haney, where do you see the program going over the next 5 to 10 years, especially given the impact climate change is having on farmers? Are there specific ag sectors that we need to focus on to encourage more participation within crop insurance?
Thank you for that question, Senator. At NCGA, it's always important that we cover our goals that we would like to have for corn, plus to make sure our other crops, no matter if we grow in our state or your state of California, that are protected, because of how important it is for those individual farmers to have that safety net or the tool in their toolbox. We just got to continue to push forward and making sure that the other politicians that don't appreciate crop insurance, that we can convince them how important it is for the farmers, because with our inputs right now, we have to have that safety net or that tool in order to continue farming the next years. So I would say it's just as a matter of the commodities, we're still working together and pushing forward for a strong crop insurance program.
Thank you, Mr. Haney, and you demoted me by calling me a senator. Thank you. Madam Chair, I yield back.
All right, thank you very much, Mr. Carbajal. At this time, I will yield to Mr. Allen from Georgia for 5 minutes.
Thank you, Madam Chair, and good afternoon, everyone, and panelists, and thank you for giving us your time today. The issue we're discussing, obviously, is crop insurance, and it's never been more timely. Commodity prices overall are high right now, but for many farmers, the cost of doing business has increased at a faster rate. According to a study conducted in April by Dr. Don Shirley, Professor Emeritus of Cotton Economics at the University of Georgia, while cotton prices are 20% higher than 1 year ago, production costs, both variable and fixed, have risen over 30% during the same time span. Dr. Shirley's figures also document an inflation rate for the price of items used in farming at a significantly higher rate of inflation than the national average. As we write the next Farm Bill, we must analyze this problem our farmers have faced in recent years. It reminds me of the early 80s. Their profit margins are disappearing, the issue is not sustainable, and we must reckon with it. Mr. Fowler, can you speak to what Congress can do to ensure we are not undermining the current crop insurance program, and is there any way Congress can help promote participation?
Thank you for your question. Yes, I think so. There are some additional products that we can take a look at, but yes, we need to have greater levels of coverage. We need to be able to participate at a higher level of coverage, and that is affordable, especially when the margins are so skinny out there at this point in time. And I think if we can look at that and maybe increase the baseline to the budget and be some creative in the new Farm Bill, that would be very helpful to producers for higher levels of coverage.
Now, for our farmers to be able to borrow the funds necessary to, for production ag, obviously you have to have crop insurance. Do you require crop insurance?
Some lenders do require crop insurance, but actually lenders like crop insurance. I mean, they can see what the crops that are there with cash flow rather than an asset lending base that we had back in the 80s.
Okay. Do we have Mr. Cromley on? I think we were having, there, Lee. We got to fix our broadband down in rural Georgia, don't we, my friend?
Absolutely.
Mr. Cromley, your testimony, you mentioned the need for higher levels of insurance coverage at a more affordable rate. What ideas have been discussed for a cost-efficient coverage program for the benefit of all of our farmers? Have we been in discussions about that through Farm Bureau and the other ag agencies to try to rectify this problem?
There have been ongoing discussions about this throughout all the industry. I think it's just the current situation just underscores the fact that with all the increases that you referred to, increases in all costs, our fertilizer costs have doubled, seed costs have gone through the roof, fuel, everything that fuel touches. So our margins are just unbelievably small right now. And the problem that concerns me with crop insurance is with this tight margin, something's going to have to give in order for this to work. I'm out again.
I've got about a minute and 20 seconds left, Mr. Cromley, but we had and you attended a farmer roundtable in Statesboro, Georgia recently, and at that roundtable, I saw a lot of really fear in the room. Not only with what you're having to deal with as far as inflation today, but what it is going to look like tomorrow. In other words, as I understood it, it was hard to even tie down a price on fertilizer. And I'm hearing the same thing, by the way, in the construction industry, which I was a part of, and other industries. So where are we right now? Are you continuing to see the price of the things you need, and of course there is some regulatory resistance against the products you use to harvest and to get the yields required. What are you seeing right now?
I think you're exactly right in your comments. I think uncertainty and volatility are probably two words that would describe the countryside right now, at least where I am. There's just so much uncertainty about everything. And that goes back to crop insurance a little bit from the standpoint that crop insurance is one thing that can give us some stability, some predictability. And so that's why it's really even more important now than ever.
Okay.
I think some premium discounts always would be something we could look at, and other things to make it a little more affordable. As I was saying earlier, I think crop insurance might be one of those things that some people are forced to not participate in as margins get tighter, and I hope that's not the case. But
yes,
I think it's reaching that point, that level of concern.
Okay. Well, listen, thank you so much. Thanks to all of our witnesses, and Madam Chair, I yield back.
Thank you, Mr. Allen. I now recognize Mr. Lawson from the state of Florida, who's with us virtually for 5 minutes.
Thank you very much, Madam Chair, and to you and Ranking Member Scott for holding this meeting. And I would like to welcome all our participants to the meeting today. You know, federal crop insurance is an incredible, successful public-private partnership that stands as the primary safety net for U.S. producers. However, among producers and crop insurance companies, we have heard how complicated and time-consuming it can be for insurers, specialty crops. And we have a lot of specialty crops in Florida, with many of these consumers being small and historically underserved producers. In your testimony, Ms. Fowler, you mentioned that cuts in administrative operation per policy pay method unfairly impact specialty crop producers. In addition to increasing the ANO to 2020 level, what else can Congress do to address this gap and incentivize crop insurance companies to work with specialty producers?
I think making those adjustments in the specialty crop area is a start and a great place to be. I would encourage make it easier for participation with those agents to get staffed up, not only through technology, but skilled staff members that could reach out to more people. And also, the specialty crop area is so unique and so driven toward that farmer's own individual operation. And if we can continue to tweak these products and make them more straightforward so they're understandable and you know exactly where you're going to be, I think there's a lot of opportunity to continue to grow that area. With all due respect, once again, the specialty crop area is an area that has increased tremendously, and there's a lot of work to make sure that you individualize that coverage. So I would look forward to the opportunity to help in that area.
Okay, thank you very much. And you know, here in Florida, you know, we always preparing for hurricanes. It's hurricane season. Mr. Crumley, you mentioned that how hurricane insurance protection wind index does not provide coverage for losses due to tropical storms, even when devastating winds and rain cause damage. Do you believe that tropical storm damage should be included in the protection wind index? They're in a different program that you may feel better that need to be covered these losses.
Thank you, sir. I think the hurricane product is a good product. I was glad to see it. It's something that, like I say, I'm 60 miles from the coast, so it's critical for me to consider this product. We had an example. I can give you an example in Texas where a grower was a mile or two outside the hurricane zone and had tremendous loss because he was that close, but yet he didn't qualify. He had tremendous wind, tremendous rain, tremendous damage, but because it was not hurricane level damage, he was out. And I don't think that was the intent of the program. I think the program could be changed just a little bit to where damage would be not necessarily wind, but actual damage could be measured and determine the level of loss. So I would hope that's something that you could consider. Hurricane winds are devastating and terrible, but there are tropical storms and things that are just as devastating at times.
Okay, did anyone else want to comment on that? What about you, Ms. Fowler?
Yes, the hurricane coverage has been a great product that's come into play. I don't write any of that currently, but I have a lot of agent friends that have written a lot of hurricane insurance coverage, and they really, the producers like that, and it's been good coverage, especially for that certain peril.
All right, Madam Chair, I yield back.
All right, thank you very much, Mr. Lawson. At this point, I will yield to the gentlewoman from Illinois, Ms. Miller, for 5 minutes.
Thank you, Chairwoman, Madam Chairwoman, and Ranking Member Scott. This is an important topic, and I assure everyone that our number one priority is protecting crop insurance as our number one risk management tool. So I have a question any of the witnesses can answer. Can any of the witnesses explain the dangers of using crop insurance rates as a tool to change farmers' behaviors, likely in the name of climate change, or incentivize certain practices that have yet unproven yield benefits?
Thank you for that. Thank you for that question, Representative. You know, at NCGA, that you mentioned how strong that we want to make sure crop insurance stays right where it's at. You know, I had a tough time understanding a couple of your little points there that you had made because of my older age here. I guess my hearing is not as great as it was once, but could you repeat just the one just on with the crop insurance and maybe some fraud that you were talking about?
No, I'm concerned about the danger of using crop insurance rates as a tool to change farmers' behaviors, you know, such as the climate change.
Okay, right, I got you now.
And incentivizing certain practices that, as of yet, have unproven yield benefits.
As of right now, I'm not able to talk a lot about that, but I can say, as far as NCGA is concerned, we want to make sure that we're strong this way, that we're not making farmers change, or if there's going to be problems with new laws with climate change or whatever, that's going to have to be waiting down the road, in my opinion, to see what happens. We continue to look into that, but as of right now, we have not talked an awful lot about changes that way from crop insurance the way we have it now to where it might be down the road? Maybe I'm not helping you, but that's where we see it going right now, that we're not looking that far down the road.
Thank you, and thank you for the question. Actually, I think I addressed that a bit earlier as far as crop insurance is concerned. Crop insurance was set out to protect the profitability of the farmer. And I think at this point in time, that's where we need to stay focused. You don't want to get too strung out on too many different things, and then you just water down the crop insurance product. I mean, we need to stick true with the practices that we currently have, and we need to cover the profitability. We have reinsurance contracts out there with real reinsurance companies, and I think they're going to want to understand how to mitigate that risk.
Thank you. And then Ms. Fowler, as an experienced crop insurance agent that has seen the program evolve over time, can you speak to the growth of the program and how it has provided you the opportunity to start a business and create job opportunities in a town like Memphis, Tennessee?
Okay. Thank you once again for the question, but it is Memphis, Texas, with a population of about 2,500. So rural America at its best. But yes, it has been incredible to see this program evolve. It's been incredible to watch producers who have had this crop insurance and have had stability within their family operations. I'm now insuring down to the second and third generation with those producers. Also, it has been great. I have 19 employees in 3 offices, and we are engaged. We do everything we can. Sometimes it's pretty skinny out there with all the different things that we want to deal with and that we help producers when they come in. But also, in turn, we get involved in the community. We get involved with community pieces, whether it be with FFA projects, whatever the community might need. And so it's great to see that and have that opportunity.
That's great, thank you. And quickly, this is for any of the witnesses. What are the potential impacts if the U.S. were to completely forgo the private sector delivery system, as we've seen proposed by some, and revert to a government-run insurance program through FSA? What would you say to someone who champions this type of proposal?
Once again, I'll be glad to step up. You know, we work closely with FSA. FSA has their programs, we have our programs, and quite frankly, we need each other out there, and we need to be able to work together. But once again, that program was delivered years and years without a lot of participation, and I think crop insurance has its own absolute track record, the success record that we have today. And one thing is that we can deliver timely payments in order for a producer to have cash flow and get back to the bank and start and go again.
Thank you so much.
Thank you, Ms. Miller. I will now yield to Mr. Mann from the state of Kansas for 5 minutes.
Great. Thank you, Chairwoman Bustos, for having this hearing, you and Ranking Member Scott. And to all our panelists, we're 14 and a half months out, from this current Farm Bill expiring. Crop insurance will be my highest priority, and I think should be the highest priority so far as production agriculture goes for this committee. Kansas farmers have told me repeatedly that as we look at crop insurance in the next Farm Bill, let's use a scalpel and not a sledgehammer. Let's make some tweaks, let's work to improve it, but let's acknowledge that what we have is a good program. And it's a successful public-private partnership that I would argue, to my last breath to anyone, is good for producers, it's good for rural communities, it's also good for our consumers to have a constant food supply all over this country. I do also think we need to acknowledge that we're in an era of record high input prices, and the safety net that currently exists, was designed to withstand a fall from, say, 10 feet. But when you double, quadruple input prices and that same producer is falling from 40 feet, I think we need to really discuss, is the safety net the appropriate height off the ground, so to speak, moving into this Farm Bill. A handful of questions. I'll start with you, Ms. Fowler, and thank you for being here. In my view, one of the key features of crop insurance is the ability for private entities to craft policies to address risks or cover new commodities. The process, which you referred to in your testimony, the 508H process, is well supervised and allows the Federal Crop Insurance Corporation Board to control new product approvals without OMB interjection. Can you explain why it is crucial that the FCIC has autonomy over federal crop insurance?
Well, the FCIC actually is the background to the crop insurance. That's who actually services they put the policies, they write the procedures for the background for the insurance there. But actually, you were, I believe you were visiting about, falling the 40-foot. We really need some additional participation at higher levels, and the extra products that have come from the 50H process, whether it be the SCO, stacks, ECO, all of those products are great products, and they're just beginning to evolve. We've just now started with those products, and I think if we have some additional price support and participation with those products will really help us. They are already set in place and can make a timely payment.
Great. One last question for you, Ms. Fowler. As you know, up until 2015, the Risk Management Agency adjusted the overall A&O cap annually for inflation, and it has remained stagnant since. Can you discuss what impact that has had on crop insurance agencies across the country?
Yes. Once again, thank you for that question. Yes, we do everything we need to do. We go out, we help farmers, but yet I'm conscious of what those expenses are, and I have a highly skilled staff. And you just don't say walk away for 6 months and we'll see you back. I mean, it takes a year to train any type of staff or team member within my agency. So yes, we try to do more with less. We use technology. We try to be very efficient. We try to be thorough to start with. But yes, I am very conscious of that. And those folks, we live in rural America. They have home payments, house payments. They got kids going to school. So it's important that I try to stay static and do the best job I can at managing expenses, especially in this year where we're looking at a lot of losses.
Yeah, and I think we've got to acknowledge, the program has to work for the producer, but it also has to work for the insurance agents that are delivering that product and are boots on the ground. So thank you for that. Last question, that's for you, Mr. Haig. As you know, federal crop insurance policies can be improved with additional product development and innovations such as the trend yield adjustment, which has been very beneficial for corn producers. What are some specific steps that National Corn Growers Association has taken to ensure risk management tools are evolving to continue to meet the needs of producers today and into the future?
Thank you for that question there, Representative. It's important that, the corn quality that we use right now, the corn maturity is everything that we're raising that much more corn, so that adjustments are very important going up to make sure that you're covered with the right, what other percentage you want to use. So that trend yield is very important, because if we have 4 good years in a row, you've got 4 good years of base there, or 5th year, and all of a sudden you have a poor year coming in there, that's going to help you when you have that poor year going and up there, so you're going to get paid back on respectable money. Yeah, it does come down like it has, but in a year or two, you're going to get back to normal, where you don't have that, hope you don't have that drought for 2 or 3 years in a row to do that. So that trend yield is important, and that's one of the bigger things that I think has had a big plus with corn growers to make sure that they have to take crop insurance on, that it's more beneficial for them in the end.
Great. Thank you. I see I'm past my time. Thank you.
All right. Thank you very much, Mr. Mann. Mr. Ranking Member, are you settled in enough for me to yield to you for a second? Sorry to throw this at you so quickly.
Absolutely.
All right. Well, we're really glad you're
Madam
here with
Chair.
us, Mr. Thompson.
Thank you.
The Ranking Member of our full committee, I will now yield to you for 5 minutes.
Thank you very much. Thanks for your patience, Madam Chair. As you know, I like to be here at the beginning, not at the end of these, so my apologies to our witnesses, but thank you so much for testifying and for your written testimony. Madam Chair, Ranking Member Scott, thank you both for calling this important hearing, and I apologize to you and the witnesses for my tardiness, but I wasn't able to make the 9:30 start time on late notice, because I thank you for accommodating me. Since becoming a Republican leader of the House Agriculture Committee, I've embarked on what I am calling a perpetual barnstorming tour that has taken me to more than 40 states to hear directly from the producers. On these journeys, the most commonly mentioned piece of federal policy is our crop insurance program. I've heard firsthand from numerous farmers how crop insurance saved them from bankruptcy following a disaster. but its purpose goes well beyond helping producers in the wake of a loss. Crop insurance provides a base level of reliable risk management that helps the economic engine of rural America running in good years and, quite frankly, in bad. Without crop insurance, lenders would not be able to provide the levels of credit to the farmers necessary to operate a farm in today's high-cost environment, and producers would not have the ability to make investments in their operation to take advantage of new technologies and practices. I've even been told that crop insurance is often what stands between us and a 1980-style farm financial crisis, which was so severe it even wreaked havoc on the economies of some of our largest cities, because crop insurance provides collateral to lenders and obviates the need for asset-based lending. The key selling point for me on crop insurance is the framework of the public-private partnership between the government, approved financial providers, agents, and farmers. This partnership allows USDA to set fair prices for coverage, companies to compete on service, and farmers to have skin in the game. The result is a program that is fair to the taxpayer, reliable for farmers, and provides job opportunities in rural communities for agents and loss adjusters. The numbers tell this success story well. Since the Ag Risk Protection Act was passed in the year 2000, insured acreage has more than doubled, and the value of crops insured has increased almost sixfold, from $35 billion to nearly $200 billion. Now, I'm sure we've heard in discussion today about the ad hoc assistance that has been provided outside of crop insurance. And I've been supportive of those efforts in the immediate term to give additional help to farmers suffering devastating losses. But I do not believe this will remain a viable option for an extended period of time, and we must proactively look at how crop insurance can be improved to cover these losses. Today's hearing, I think, provided a valuable opportunity to solicit the firsthand experiences of farmers on the ground dealing with these losses, and the perspectives from those within the industry that can help guide this committee during the development of the 2023 Farm Bill. And finally, I want to touch on climate and the push by some to hijack crop insurance program to carry out a half-baked environmental experiment. This must stop before irreparable harm is done to a farmer's most critical risk management tool. Let me be clear, this isn't an ideological concern. I support efforts to expand and improve our conservation work. But crop insurance already provides clear incentives to be good stewards of the land. The more a farmer can increase their yields or mitigate losses, the better their coverage options will be. And we don't need to cherry pick certain practices that might only work in specific regions of the country and use crop insurance to try and force all farmers into adopting the practice. We already provide nearly $6 billion per year in locally led incentive-based conservation programs through the Title II of the Farm Bill. That is the appropriate place to have these conversations, not in Title XI, crop insurance. Now, I'm confident if the data supports it and economic conditions allow it, farmers will naturally gravitate towards adoption of the practices best for their farms. We don't need to use crop insurance as a carrot or worse, as a stick to force their hand. Madam Chair, thank you again for convening this hearing, and thank you for our 5 witnesses for agreeing to be here this morning. And I may have come in late, but I got a chance to go through your written testimonies last night, and I do have a few questions. First, let's start with Mr. Haney and Ms. Fowler. Every Farm Bill cycle that we must battle, every Farm Bill cycle, we have to battle critics who attempt to impose limitations or means testing on crop insurance. And one of these organizations, the National Sustainable Ag Coalition, just released a report examining the impact of a variety of these proposals that show that they would cut premium assistance by up to 30%. Ms. Haney or Ms. Fowler, could you explain the impact proposals such as these would have on the viability of the program overall? In particular, what impact would this have on specialty crop producers, which are typically insuring high-value crops?
Ms. Fowler,
Thank you for
go
that.
ahead, please.
Go ahead.
No, go ahead, Kathy, please, by all
Okay.
means.
Thank you, Congressman Thompson, for that. I can give it to you pretty short and straight. Absolute non-starter. And simply put is that you start taking people out of the risk pool. It takes all of us to keep the loss ratio under the statutory 1.0%. And we've been able to manage and we've been able to do that. But we need all people in the pool, and we need to make sure that everybody's engaged, because otherwise this program doesn't work.
Ms. Fowler, thank you. Mr. Haney, go ahead.
Thank you, Congressman, and I couldn't say it any better than Ms. Fowler has. At the end of the day, from an actuarial perspective, if you start removing those larger bulk premiums at the top end, it will have a dramatic effect on the smaller producers and the smaller premiums. They'll have to carry the, if you will, the load of the loss ratios. And Ms. Fowler's 100% correct. It will have a dynamic effect if that's done.
Very good. I like how she summed it up as a non-starter. So, Mr. Offerdale, as you are aware, I've expressed an interest in exploring options for a safety net based on margin to address the squeeze producers find themselves in with sky-high input costs. The success of the Dairy Margin Coverage Program is what spurred my interest in this topic. Can you briefly explain how the margin protection insurance policy you developed works, and do you foresee opportunities to expand the availability of that policy in the future?
Yes, and respectfully for my first answer, very briefly. The Margin Protection Program is designed to protect people from decreases in commodity prices, decreases in yield, or increase in input costs. A program has been available for a handful of crops since 2016, and the crops for which it's available are the ones where we had the best data. It's a 508H experiment that's been highly successful, but at this point, participation is only about 6,000 policies a year. It's a bit more expensive because it enjoys a lower subsidy rate than other crop insurance programs as an experiment, but there are tremendous opportunities to expand it nationwide rather than just core Midwest states and a handful of crops.
Very good. Well, thank you for that. Mr. Egg and Mr. Cromley, could you speak to the relationship you have with your crop insurance agent, and how has the service provided by your agent differed from that of the Farm Service Agency, particularly throughout the pandemic? Mr. Egg, why don't you go first?
I think it's much easier talking with our crop insurance agents. They have a better understanding of what happens out on the farm. The FSA are good people that work in the offices, but they don't get a chance to get out to the farms to see how your operation's running and just get the little technical things about how things work. So working through an agent, in my opinion, and that's what we do, it's much easier, it's much better. He understands our farm program and our farms, and we get the best advice from him.
Very good. Thank you. Mr. Cromley, any comments?
I would echo that in the sense that our agent is involved in agriculture. He farms some. He's aware of the issues. He knows the challenges. FSA people are great. They're great, but it's not the same level of participation, not the same level of understanding of the challenges we face. So that public-private relationship is just absolutely critical to all of us, I believe.
Well, once again, thank you for that, Ms. Cromley, and once again, thank you to all of our witnesses, and thank you to our chair and ranking member for this subcommittee hearing. Much appreciated, and I yield back.
Thank you, Mr. Thompson, and thank you for being so good at being part of our subcommittee hearings. We appreciate your attendance and your participation in all this. I want to thank our witnesses, the three here who are here in person, the two who are with us virtually. We have Mr. Haney, Ms. Fowler, Mr. Offerdahl, Mr. Haig, and Mr. Cromley, and we do appreciate it. Thank you also to everybody for accommodating the time change. The First Lady of Ukraine is addressing the House and the Senate at 11 o'clock, so we'll be heading over there. And obviously, Ukraine is very, very important from an agricultural perspective as well, so we appreciate you accommodating that. Before we officially close out, I'm going to yield to our ranking member, Mr. Scott, for any closing comments he may have.
Thank you, Madam Chair. As we talk, you mentioned Ukraine. I do want to bring up the fact that the Russians are actually sending rockets into the wheat fields there and setting them on fire. I think that the world, probably for the first time since the 40s, may watch as a ruthless individual and Vladimir Putin uses food or like the Rav as a weapon of war. which reiterates the fact that we in this country need to make sure that we're taking care of our producers. So while most Americans think about food as a jar of peanut butter or a loaf of bread, those of us on this committee and in this room realize that it is the peanut farmer and the wheat farmer that actually grows the crop that allows us to go into the grocery store and buy the food that we need. 90% of our food supply, I'll say that again, 90% of our food supply in this country comes from 12% of the farmers. The proposals that come before this committee by groups on the far right and the far left that would effectively disincentivize those farm families to purchase crop insurance are detrimental to the whole ag industry and the food supply of this country. If you take the best risk out of the system, and our farmers, our large farmers are the best risk that we have that are buying crop insurance, then you're going to raise the premium on everybody else and make it unaffordable. I hope as we go forward, I look forward to writing the next farm bill and keeping the focus on the food supply of the United States. We do not need to be dependent on foreign sources of food. With that, Madam Chair, I yield.
Thank you to our ranking member. And again, thank you to all of our witnesses. Under the rules of the committee, the record of today's hearing will remain open for 10 calendar days to receive additional material and supplementary written responses from the witnesses to any questions that were posed by a member. This hearing of the Subcommittee of General Farm Commodities and Risk Management is adjourned.